Hello, welcome to the European Open briefing for Thursday, September the 14th. I'm Rafi Baijan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So the dollar is still fairly buoyant. It hit a 1 month high against the yen earlier this morning. The focus now is US inflation data that's due later in the day. The focus today will also be on the Bank of England as they will conclude their two-day monetary policy meeting. They're expected to hold rates at a record low of 0.25 percentage points. However, markets are eager to see which way the vote will go, as there's speculation that we could possibly see a 6-3 vote split by the Monetary Policy Committee. The pound had hit a one-year high against the dollar after Tuesday's strong inflation data. It has retreated from those highs. Another notable mover this morning is the Australian dollar. It jumped higher from strong jobs figures out of Australia, but then it fell slightly after Chinese data disappointed. And in commodities, oil prices were given a major boost yesterday by the IEA's latest report that said that the oil market is rebalancing faster than expected. Let's start though with the US dollar. We can see dollar yen in orange, currently at around 110.40. It did hit a 1 month high of 110.73 earlier today. The dollar index hit yesterday a 1 week high of 92.53. We can see there was a bit of divergence between the dollar yen and the dollar index, but now the dollar index has closed that gap, possibly due to the slide in sterling. Also boosting the dollar, apart from the fact that risk sentiment has been recovering, particularly after that deterioration we saw on Friday in risk appetite from the concerns about Hurricane Harvey and North Korea. So those threats have receded, and we also have now renewed hopes that tax reforms will get done this year. The U.S. Treasury Secretary Steven Mnuchin told Fox News that they are on track to get the reforms done this year, and also we are seeing strong efforts by President Trump to reach a bipartisan deal with both the Republican and Democratic parties working together. So there are some renewed hopes on that front. But for now, the focus will be US inflation data, followed by retail sales numbers tomorrow, as this will be the last major data ahead of next week's FOMC meeting. Although the Fed is not expected to raise rates next week, it will be interesting to see whether they will keep the option open in terms of raising rates one more time later this year. Moving on to the UK pound, because of course the Bank of England will announce today's latest policy decision. They are expected to hold rates unchanged, but it'll be interesting to see whether or not the bank will become more hawkish given the strong inflation data we saw on Tuesday. Yesterday we saw jobs data, of which, although the unemployment rate was at its lowest since the mid-1970s, wage growth disappointed. That's why we saw cable retreating from 1 year high 1.3328 to just above the 1.32 level. Although against the euro, sterling has pretty much held on to its gains. It's currently trading near those 1 month highs at around the 0.90 handle. So what investors will be looking for in today's Bank of England meeting will be how the vote will go. If we do see a 6-3 vote, it possibly means that more MPC members are becoming hawkish. If we see a 7-2 vote, that will probably be seen as dovish. And also worth keeping an eye on is Theresa May's speech on September 22nd, where she's going to be giving a major speech on Brexit in Italy, and that could possibly be a sign of which way the negotiations will go when the fourth round of Brexit talks resume the week after that. Let's look at the Australian dollar now, because we did see very impressive jobs figures out of Australia. We saw employment rising by 54.2 thousand. Expectations were for just 15,000. The unemployment rate did stay unchanged at 5.6%. However, although this was due to the labour force participation rate rising, so overall the jobs market is looking very strong in Australia. We saw Aussie breaking above the 0.80 level against the dollar, but it did ease back somewhat after disappointing Chinese data. We had a series of Chinese indicators. Fixed asset investment they all missed expectations. Fixed asset investment fell to, well, not fell, but grew at the slowest rate in 18 years. Industrial output growth was at its lowest in 9 months, and retail sales growth was its lowest in 6 months. So this did somewhat hurt sentiment a little bit in Asian markets, although it's not being considered as being too worrying, given that overall recent data out of China has been fairly good. Let's look at the Kiwi now, because we did see strong gains early in the week after election polls put the National Party, that's the ruling party, way ahead. But then yesterday other polls were mixed, and today we saw another poll showing that the Labour Party is actually ahead of the National Party, so that hurt the Kiwi. It has settled now a little bit, rising above those lows. It's currently trading on 0.7230. The Swiss National Bank concluded its meeting today ahead of Bank of England one later in the day. As expected, the SNB kept interest rates unchanged in negative territory. They did revise down the GDP forecast for 2017, although inflation forecasts for the next 3 years were revised slightly up. But looking at their statement, the SNB maintain that the Swiss franc remains highly valued, and they also reiterated their commitment to being active in the foreign exchange markets, saying that the FX market is still fragile. The franc has gained about 7% against the euro this year, but the SME doesn't consider this to be enough to consider that the franc is no longer overvalued. And also worth noting that against the dollar, it's actually risen in the year to date. We can see that both the dollar and the euro have recovered from those lows we saw last week, when we saw big jump in risk aversion. Both are trading at near 2-week highs against their Swiss counterpart. Looking at oil prices, we can see that divergence in Brent crude and WTI. Brent crude is currently trading at 5 months highs, whereas WTI is near 1-week highs. The reason why oil prices are up, they rose sharply yesterday. They're slightly down this morning, is because the International Energy Agency revised up its forecast for demand for 2017. This follows a similar projection by OPEC a few days earlier, and the IEA also said that that global oil surplus is beginning to shrink, so that's overall is positive for crude oil prices. In the meantime, we did have the latest weekly inventory numbers out of the US yesterday. We saw, as expected, well, actually, the falls and the increases were expected, but the actual size of the declines and gains were they missed expectation. U.S. crude stocks rose by more than expected, given that the refineries were shut after Hurricane Harvey. So refineries weren't able to process the oil, so that led to a big drop in demand. In the meantime, gasoline and distillate stocks fell sharply, because obviously we weren't seeing any new gasoline being processed due to the refineries shutdown. So all of that was pretty much expected. Despite the figures being not quite in line in terms of the precise numbers, but nevertheless it didn't really surprise the markets. The main focus by traders has been what the IEA said in its latest assessment. And quick look at oil prices, we see that they've been sliding downwards after hitting that 1 year high last week, currently trading slightly above the 2-week lows at 1,323 at the moment. We are seeing repeated threats coming from North Korea. They issued fresh threats against Japan and the United States, saying that they will use their nuclear weapons to sink Japan and reduce the US to ashes and darkness. But we saw very limited response in the markets to those fresh threats. Looking at today's economic calendar, we can see that Chinese data there, all of them coming below expectations, and the SMB decision there, the main rate, LIBOR rate, was unchanged at 0.75%. The Bank of England decision is due at 11 hours GMT, and later in the US session we're going to see the inflation numbers and the weekly jobless claims. That's it from me. Thank you very much for watching and have a great day.